Good afternoon. Happy Wednesday, January the 15th. Hope everyone had a great trading session as we got our core inflation data. And I tell you what, the market definitely did not disappoint, especially if you are a market bull. We had massive stock outperformance on Wall Street with 10 out of the 11 S&P sectors sharply higher, paced by a more than 2% gain in financials, technology, and consumer discretionary as investors kind of cheered the December core CPI inflation report, and we also got strong earnings from several large cap banks. So a lot going on this morning to get this rally going. The December Consumer Price Index rose 0.4%, while on a year-to-year basis, it rose to 2.9%. So pretty much in line with what we were expecting, as we can see here. Core CPI 0.2, CPI month-over-month 0.4, and the CPI year-over-year 2.9%. The estimate was 2.9 across the board, but a slight rise than the previous reading. This was expected. The main interesting part is that even though we had an inline reading and everything seems to be okay in that front, and we're not really anticipating a rate cut for the Fed meeting in about 2 weeks. That's January the 28th through the 29th is the next Fed policy meeting. But financial markets are increasing their bets on a rate reduction in the June meeting following today's data. So 6 months out, it looks like we're looking for some sort of possible rate cut. Like I said, we had big earnings from JPMorgan, Citigroup, Wells Fargo, Goldman. They all reported big profits that beat analyst expectations. The US dollar finally took a little bit of a slip there. Bitcoin topped 100,000. Gold prices jumped about 2,700 an ounce. And yeah, with today's move, stocks got back above key technical levels and a little bit of a momentum shift. And the S&P 500 and the Nasdaq and the Dow all registered the biggest 1% gain since November 6th. So all in all, huge day. Not going to take away anything from that. This might be a little bit longer video because we're going to take a look at some of the things that we were looking at over the weekend and just kind of reevaluate where things are. I think that's important, especially with the midweek report. So looking here at the SPY, we're just going to jump into things. SPY weekly on your top left here is the weekly. We can see that the bulls continue to hold the weekly 21. This was our key focus that we've been talking about. Here on the daily, we have now moved into a neutral position. Same thing on the hourly, and we have hit our head right here at the daily 50 simple moving average at about the 595 level. We recaptured the 21, so we're kind of wedged between these two moving averages for the time being. There's a nice little gap here that we will want to keep an eye on in case things do want to slip out. But we are also up against this trend line, this wedge trend line that we need to break out. So the daily 50 simple moving average is going to be our next point of interest for the bulls to take back in charge of and close back above. And then we could probably talk about new targets around the 600 area. So that's what we're going to keep an eye on. You know, if we look at the hourly, before I move on to the hourly, we can see that the daily time frame is still in that that low compression squeeze that we're still focusing in on. But interestingly enough, we got a new strong thrust signal to the upside based off of today's move. So if we can get some follow through, that would be great. Maybe we finally spooked the bears out of their positions today, but we'll see what the next day or so brings. But yeah, moving on to the hourly, I discussed yesterday that if the bulls had a pretty good reading and we pushed to the upside, I was thinking, maybe we can come up to this hourly 200 here, and that's in fact just about what they did. And we had this nice little gap up and breakthrough, and now we're just we're kind of in la la land where we're between the key moving averages. So 595 is still the resistance, and if we happen to pull back, we'll see if that hourly 21 holds up, which would be about half gap at this point in time. But all in all, we're back in a neutral position on the daily, so that's good. And we'll see what the next session or two and how the week pans out. Let's move on to the Nasdaq. The Nasdaq, as we remember, the level of interest that we had was the 500 level on the Qs, and they have defended that rightly so far with this hold of the weekly 21 EMA. Long-term buyers seem to be stepping up here, especially with today's reading and strong report from financials. If we zoom in here on the daily, we can see that we're back in a neutral position on the daily. The histogram has shifted from a red to yellow, and we're still in that low compression squeeze, and we have reclaimed the key moving averages. So this bodes well for Nasdaq bulls as well for the time being. Still in a neutral position on the hourly. Still some structural things to work out here, along with the SPY. We still are holding below the hourly 200, which sits at about 520. So if we get an extra push here above today's high, then 520 is going to be my target to the upside. So there's that. Still going to be focusing in on the low compression squeeze here on the daily. And yeah, we'll see what happens in the next session or two. Let's go over to the small caps, see how the small caps performed today. Up a little, about 2% on the session. Holding the weekly 50. We are still in a weekly squeeze here. That's good to take note of. The daily. This is where things get pretty cool. Looks like bulls continue to hold the daily 200. We reclaimed 219 yesterday, and then we get the nice little gap up today. So small caps looking, they've recovered. We're still in a neutral spot here on the daily, mid bull on the hourly. I'm not much of a much of a small cap player, but good to see that bulls held on to the daily 200. We can shift over to the Dow, and we'll see that the Dow has reclaimed the weekly 21 EMA with the weekly low compression. We also have a daily low compression squeeze here on the TTM squeeze. We can see that they did reclaim that 421 level. We got a little bit of a top hat pattern, and yeah, nice little push up to the daily 50, and we're kind of wedged in here now. But I think the Dow still has a lot more work to do. Mid bull on the hourly, bonking our head right there on the hourly 200. So we're at a little bit of a dynamic resistance on the Dow. Let's zip on over to the semiconductors, because the semiconductors have been quite at an interesting spot, and they continue to hold well. Bulls continue to maintain what they need to do. We're still holding the key moving averages on the weekly with this pretty nice looking weekly squeeze. So it's just a matter of, can we get back above this 262 mark? We do have TSM earnings tomorrow morning, so all eyes and ears are going to be on that and how that will impact semiconductors in general. Looking here at the daily, we can see that we continue to hold the daily 200 simple moving average, and that is the key spot for me here. As long as market bulls continue to hold the daily 200, it's safe to nibble around on some semiconductors and see where things stick out. But like I said, we got TSM earnings tomorrow that could shape things out. Looking at let's see. I know we briefly mentioned the dollar. The dollar got whacked down these past few sessions, back down to the daily 21. If the dollar's going to bounce, this is probably where they will want to see where this is where they're going to want to try to do it, especially around this 108 mark, which would give you a nice little retest. And they've already retested it, held pretty well here over these past few weeks. So the dollar, in my opinion, has not given up too much just yet. So that is something to keep an eye on. I'm not going to pull up the RSP, which is equal weight S&P 500 or the mid cap ETF, because those are going to look just like the IWM or the Dow. But we will go through the individual sectors here just to see where things are at. The XLB remains a strong bear situation, even though they've had a really good bounce off this 83 level. They did not break down. So let's move on from there. Let's go to the communication sector, the XLC. XLC back into a neutral position. Let's see. The weekly 21 continues to hold on the XLC as well. I did get into some Google calls, which we'll go take a look at that. The Google Daily looks fantastic. It continues to hold this crucial zone here between 190 with a mid-level compression. I mean, this looks pretty set to go on some sort of move. I did take the let me pull it up. The January 31st 200 calls for $3.50. Those are the that is the earnings expiration series. So we're looking for a nice little pump into earnings. Meta in this sector came back with a vengeance. I had a debit spread on this. I got stopped out yesterday, and of course they print this beautiful candle today. I thought about getting back in, but I went and just decided to go with Google instead and do things that way. Energy, yeah, let's go check out the energy sector. Energy sector continues to have its push on ahead. Crude oil, anytime we look at energy, we also want to take a look at crude oil. Crude oil getting back above that $80 per barrel mark. And one of the better looking energy names that I've come across is definitely CVX. Probably the better looking. A lot of them still don't look that great, but CVX is definitely not too bad as far as that goes. Moving on to financials. Financials are in the middle of their earnings session, but as you can see, we had this nice little Darvas box between 49.30 and 47.50. You get that little top hat move here right at that 47 mark. Maybe get some bears too excited, and then off we go. And instead of coming all the way down to the daily 200, yeah, we got that big reversal there. So good stuff there. On financials, and like I said, we can take a look at some of these. JPMorgan, they had a nice beat, $4.81 versus $4.04, and we're in that low compression squeeze. This thing looks like it is ready to take on new all-time highs, so that is something that we will want to pay attention to if we can get a good entry on that. But yeah, 254, if you break out of that, we're probably looking for a move to about, let's see here, we can measure this out real quick. Let's see, there's your pullback. Let's just go to here. Yeah, we're looking at a move to about 270, maybe even 280. So pretty good looking there. Good looking chart there. You also had earnings from Wells Fargo. Wells Fargo had a nice double beat, $1.43 versus $1.35. So yeah, as you can see, financials they coming in hot to kick things off. If we look at industrials, this is more so an impact on Dow components. I'm still holding Johnson & Johnson shorts, which we can take a look at that as well. Yeah, Johnson & Johnson, a little bit of a pain, but It did not close above the 21 EMA. As long as the daily 21 EMA holds as resistance, I'm still going to hold on to this. We are now entering into a high compression squeeze on a max bear situation. So high compression squeezes, that's as tight can get as far as the Bollinger Bands and the Keltner channels. And you tend to get some pretty wacky moves off of a high compression squeeze. So we will want to pay attention to how this continues to shape up, especially on the hourly standpoint. If we happen to lose the declining hourly 200 simple moving average, then I will probably go ahead and hop out of that. And those are expiring in February. So we still got plenty of time for this to continue to work out. Nike continues to look pretty rough as well, as it continues to have weakness, and with a strong green tape today, this had a nasty red candle. So looking for some more downside on Nike towards the 70 and below mark. Let's go check out the XLK now. This is your tech heavy sector. Your biggest holdings within this is Apple and Microsoft. Microsoft had a pretty decent day. We played some Microsoft longs today and had a nice little win. But yeah, as far as the XLK goes, we're still in a low compression squeeze on the weekly and the daily. It's pretty much neutral across the board. Let's go take a peek at Apple though and see how she is managing, because Apple has had it rough these past few days, and honestly it's kind of concerning, and not much change here despite today's decent move. We came up to the hourly 50, seem to have rejected off of that. It's not, the end of the world by any means. We could just come back to the hourly 21 and then go, because you got to check. You broke out of the hourly 21. Now you just got to check in with mom and then go. But we're still in a neutral positioning on the hourly as well as the daily. Let's go check out Mr. Microsoft. Microsoft was probably one of the uglier looking stocks out there, and kind of still is. This is still pretty messy. It definitely presents opportunities to day trade, but that's as far as I would take it. I would not try to get into a swing position here. It's just all over the place. You can see prices dancing amongst the key moving averages, and it's just not offering a good risk to reward spot here. Moving on to the XLP, consumer staples. Yeah, consumer staples still keep getting hit, so definitely want to keep an eye on names like Pepsi and Coke even. So tough day for those guys. If we go over to, let's just go to the XLY, and we'll see how names such as Amazon and Tesla are doing. XLY, good little recovery move, reclaiming the daily 21. Good stuff there. The squeeze reading here went from red to yellow. That could signal that selling pressure has started to ease. Still got to contend with the hourly 200 at about the 229 mark. Something to keep in mind as we are kind of in this in-between zone here between the hourly 200 and the hourly 50. So we might ping pong around here before picking a new direction. But all in all, Tesla, went long on some Tesla calls on the 450 for next week. Stops are on a close below the daily 21 EMA. Got a nice little low compression squeeze shaping up red to yellow, so that's good. New upward thrust signal, that's a go in my book, and we closed back above this resistance level at about 428. The hourly squeeze fired long in a neutral bull position. So I don't really have too many complaints there for Tesla, and it looks like a nice little spot to take a swing at. Let's go look at Amazon. Amazon coming back with a vengeance, closing back above the daily 21 EMA. We went from a mid-level compression squeeze to a low-level compression squeeze. It looked like, this was going to break down. It looked like 216 was going to break down, but they defended it nicely here. We got the big gap up today. We'll see if that continues tomorrow. Ideally, I would like to see another yellow bar here to confirm that the selling pressure has in fact eased. and we still got to get above the hourly 200. So all in all, Amazon not too bad. All right, let's go take a look at Bitcoin real quick, and then we'll kind of end it here on with Bitcoin. Bitcoin closing back above the 100,000 level. Well, not closing, but it is back above the 100,000 mark. Still in a daily compression here. Are we getting ready for our second leg up going into the inauguration of President Donald Trump? So there we go, guys. I think we'll end it here. This sounds good to me. We covered pretty much everything that we needed to from the SPY, the Qs, the semiconductors. Let's take a peek, though. Actually, let's take a look at the SPX A50R. This is the amount of stocks above their daily 50 simple moving average within the S&P 500. When we started the week, we were only 16% of stocks within the S&P 500 were above their daily 50. We're now up to about 30%. So this is a much better reading than what we've had in the past, or excuse me, than what we've had in the past few days. So good stuff there. We can also compare that to the 200 simple moving average reading. And when we started the week, we were at 49%. Now we're at about 55% of stocks of the S&P 500 above their 200 simple moving average. All right, guys, I think that'll do it for me. Like I said, can bulls get a follow-through move? I'm going to be keeping an eye on the volume. I think that's the only thing that kind of concerned me with today's move. But momentum can definitely carry this over. Can the market bulls get back above the daily 50 simple moving average and make a statement and bring us back above the 598 mark? We saw that on the ES futures, the S&P futures. We did crack back on 6,000. We touched 6,000. That's where we rejected. So 6,000 on the S&P futures, and we'll see where they want to take us then the next day or so. We do not have anything too major tomorrow. Well, let's take a peek. We got retail sales tomorrow morning before the bell alongside unemployment claims, and then we end the week with building permits and housing starts. So a little bit more of a quiet. We got the big data out of the way, and then of course with earnings, let's see. We got we got TSM, that's going to affect your semiconductors tomorrow. You got Bank of America, Morgan Stanley coming in with the banks, and United throwing United Healthcare tomorrow morning before the bell. And then Friday, you got more bank earnings. So pretty interesting start to earnings season. And let's see what the market bulls can do tomorrow. Can they push the bears back even more and reclaim their territory? All right, guys. My name is Brian Fuzz. I will see you all tomorrow morning in the live trading session, and we will be right back at it. All right, guys, take care.